Hello, everybody, and welcome back to another episode of the Impact Farming Show. Today, we have the always amazing Art Lange joining us again. Art, how are you?
Oh, I'm well. Doing well. Looking forward to fall and winter season here, working with farmers.
Excellent. For those of you that watch the show on a regular basis, you'll know Art. He is a farm business consultant, AJL Consulting. Today, we're going to be talking about cash flow concerns. So, Art, I know you're always working with farmers and the needs stay the same but change, and I know there's something that's on your mind, and it's cash flow concerns. So do you want to talk about that high level, and then we'll get into some of the details?
Yeah, just to set the scene here, cash flow is really just having money available when you need it to pay bills, to meet loan obligations, and to pay yourself on a monthly basis for at least your family living expenses. And you should be putting money away in an RRSP or some sort of a savings tool, TFSA. Working with a young family now, I just alerted them to the fact that there are RESPs, and the government will match part of that up to a certain amount. So yeah, just planning for obligations and for things down the road that you will need money for eventually.
Yeah. And you know what? In business and in farming, what was the stat? I can't remember. Cash flow is king. And they say,
Yeah.
what, 80% of businesses fail. Here I am, Sally Chipper here. But I just need to say it because 80% of new businesses fail, not because it's a bad idea, but because of cash flow reasons.
Yeah, they don't have money available when they need it. And then all of a sudden a big loan payment comes due and you don't have money available, and right away there's issues right away. Yeah.
Okay.
So
Well, on the first note, then you said loan payments. I know one of the things that's on your mind, you're working with farmers, it's on a lot of people's mind, the CEBA loans that came out because of COVID. Do you want to talk about that?
well, yeah, the when COVID came, it affected a lot of businesses adversely, and especially small businesses where their cash flow was much reduced, the money coming in, and they had ongoing expenses, of course, that don't go away. So CEBA, the acronym is Canadian Emergency Business Account. So the government offered loans, and we emphasize the word loans, for up to $60,000 per small business that a small business operator could get, and farmers were among those. And so it's interesting to note there was almost 900,000 businesses approved for either 40 or 60,000 loans.
Wow.
And yeah, for a total of almost $50 billion. So there's a big chunk of money out there, but it was all done via the local businessman's financial institution.
Okay. So we know that the loans are coming due. Do you want to talk about a little bit deadlines, the forgiveness, all that good stuff?
Yeah. So let's just deal with the $60,000 loan, because a lot of people got those, and that was the top end. And so on January the 18th, 2024, which is in about 2 months' time, if you got a $60,000 loan and you repay $40,000 by that date, you can get $20,000 forgiveness. So that's a pretty good deal. So getting back to cash flow, you need to have $40,000 in cash available to repay that loan in the next 2 months. So planning for that is of utmost importance if you want to get the maximum forgiveness. And there's lesser amounts of forgiveness for lower loan amounts, but let's not get into those nitty details. Just we'll deal with the high level stuff here today.
Perfect. So we need to pay it back by January 18th. There's a forgiveness portion. Now, what happens if somebody doesn't have the money? Do you want to talk about that?
Well, that's where I would suggest you start planning your cash flow. And one area to look at is, do you have any inventory that you could sell before then? A grain, cattle, something or other. And you may not want to do that, but look at the alternatives. Most farmers have an operating loan. Operating loans are usually 1 or 2% over prime. Prime now is about 7% at the bank. So you're paying 8, probably more like 9% to borrow money. So that's a possibility. I don't know if you want to do that, but again, selling inventory, looking at alternate sources for your repayment, those are all options. So getting back to my main point here is that doing some planning to try to meet that deadline, if at all possible. If you can't do that, there is a refinancing proposal that you can submit to your financial institution. And if you do that, have that plan to them by January the 18th next year, then you can get partial forgiveness. And that forgiveness would depend on your individual situations. And if you can't meet that, and the deadline then for paying that under that scenario is March 28th, 2024. So that gives you a couple of more months. And if you can't meet that deadline, then you have till December 31st, 2026 to repay the loan, but you lose all the forgiveness and you're paying 5% interest, which is a deal right now compared to other interest rates out there, but you're losing all the forgiveness.
Right. Okay. That makes sense. And hopefully we didn't take the money and go buy cows or something like that. If you think of it, I mean, this might be a concern if you took that and did whatever with it, and now you're sitting here and you're selling your calves and that money needs to go to payments. It's like, okay, well, that was invested somewhere. Now what do we do? So knowing that the banks and the government has repayment options, that's good to know, right?
Yeah.
If it makes sense, or sell inventory or whatever you said, right?
Yeah. Or even look at selling some assets. When I visit farms, I look around the farmyards and I see machinery sitting there, and I sometimes ask the guy, so when's the last time you used that piece of equipment over there? And he'll say, oh, we use that maybe once a year. So what I always suggest to people is that if you're only using it once a year or so, is there an option that you could rent that piece of equipment, borrow it from a neighbor or something like that, than having it, owning it yourself, having to pay for it first of all, and then it's depreciating while sitting on your property. Let's not forget that hidden cost of depreciation. I remember going to we're a little off track here, but I love telling stories.
Oh, please do. Stories are the best, Art.
I remember going to a farmer's place one time, and there was some financial issues. And so I looked around the yard, and there was various pieces of equipment sitting there. And he said, oh, don't worry about that. It's all paid for. It doesn't cost me anything. And I said, yes, it does. And he says, what? It's all paid for. He said, there's depreciating. Every day that you have it, there's less value sitting on there. So, yeah, farmers tend to forget about that in a big way, because it's a non-cash cost. It doesn't show up.
I was going to say, it's just the business people and the accountants. They think of those things. We're like, yeah, it's paid off. We're good.
Yeah.
Oh, shoot. And that's a very good point, because interest rates aren't cheap right now. And I know we're going to roll into that. And looking at this as short-term debt, right? If you go and get a short-term loan, government or your bank, on the 40,000, 60,000, whatever it is, those are not the cheapest payments just because of the interest rate.
Well, that's right. As we said, prime is 7%, and very few people get prime on short-term loans. So you're looking at 8 or 9%.
Wow.
We have a son in banking, and he says it's only their very, very best customers that get 1% over prime. So yeah.
Okay. Well, then that rolls in. Do you have anything else you want to add to the CEBA loan before we roll
No, I
in?
think we've pretty well hashed that through that one.
Okay, perfect. Then let's roll right into, I guess, the next thing on the agenda when it comes to cash flow challenges, increased cost of borrowing, interest rates.
Yeah, as we said, the interest rates are high compared to what they were even a year ago, and so there's a new reality. And loans coming up for renewal, you're going to be looking at something in the 7% range. And that'll vary depending on your financial situation and your credit score and all that kind of stuff. Compared to 4% that was available maybe not a year ago, but a year and a half or 2 years ago, that's quite a difference for sure. And so if you're buying something new, you got to pencil in the increased interest rates to see if you can cash flow that. And with your renewal loans coming up in the coming year, if you do have some, yeah, again, you got to plan ahead for that. So shall we go ahead and get into a specific example about that?
Yes, I was just going to ask you, Art. I know you had an article and you outlined $1 million loan, I think it was, 4%
Yes.
and 7%.
Yeah.
And one knows that there's going to be a difference, like high level. But when I seen it, I'm like, oh my goodness. So can you share? Do you have those numbers in front of you?
Yeah, I do.
Okay.
And
Can you share?
so $1 million loan amortized over 25 years at 4%, the payments are $64,000, roughly. If you look at that same loan with a 7% interest rate, it's $85,000. So there's about a $22,000 increase per year on the payments due to the higher interest rates. So again, that's why we're having this discussion to alert people to those higher interest rates and what's going to be coming up. You look at $20,000 calves at $2,000. That's an extra 10 or 12 calves. So yeah.
Wow.
I could pencil that out in bushels of canola too, but I didn't have that one in my head.
That is staggering. And I'm going to go off cuff here a little bit and down my own rabbit trail. I was talking to my husband, and when the interest rates jumped up, and then you look at how much of a difference it makes in loan payments, short-term debt, cattle loans versus previous loans that we have, lower interest, it's just unbelievable. And then we were talking a little bit about people getting mortgages. And I said, oh my gosh, could you imagine if it ever went to the 80s with interest rates the way it is? And we really concluded that it doesn't need to be, because everything is so expensive right now that with the interest rates we have right now and what people are paying for homes, I don't, this is not going to be factually correct, but we're almost in the same spot because it's just right relative. Does that make sense?
Yeah, because the amounts that we're borrowing are much larger. Yeah, they're probably at least double what they were in the 1980s. But you don't remember that because you weren't even around.
Oh, thanks. Holding at 29. Oh, you're my favorite guest now, Art.
Well, we got to have a little fun here. It can't be all doom and gloom.
Yeah, I love it. Well, and you know what? The industry, we've seen high interest rates and low interest rates, but that's the importance of having these conversations with CEBA, increased interest rates, just realizing the difference. And I think the next thing that you wanted to talk about was going a little bit deeper into that and going, okay, interest rates are higher. If we're looking at new purchases or renewals, let's chat about that a little bit, because it's a different ball game now.
Well, that's right. And so if you're going to be buying something new, you really want to be carefully penciling out the cash flow to see if you can actually meet those new higher payments. And yeah, with new combine being $1 million now, in that range. And land where I live here in around Edmonton, Alberta, it's not unusual to have $1 million quarters. So yeah, and they can even go higher than that. So yeah, it's something to be really aware of and to plan for. I'm not saying you shouldn't do it, but
Right.
just plan for it.
Yeah. Just that
And
extra pause, right?
yeah, and when you go into your lender to look for a loan or to refinancing, you have a plan and show them that this is how you're going to handle those increased loan costs, and that'll put your own mind at ease as well as the lenders, because they'll see, yes, you've thought about this, you've planned for it, and you won't be hit by a surprise when the actual date for renewal or for that new purchase comes.
Okay, fantastic. I know you work with farmers on the back end when there's troubles, but you also work with farmers on financial planning, business planning on the front end to
Yeah.
prevent these situations. And I know you also have a tool to help producers with this. Do you want to talk a little bit more about that?
Yeah, this program was developed by a fellow within Alberta Agriculture about 20 years ago. It's called the Agricultural Business Analyzer, or ABA. It's a spreadsheet program, and it's got about 20 some pages, so it's quite involved. And that's the tool we use for cash flow planning, plus a lot of other things that the program provides. And I think it's a really useful tool. And right now, that program is available for a free download from Farm Management Canada, but it's fairly involved. So if you need somebody who wants to do that, well, of course, they could hire me, or they can download the program and try and work with that themselves, and give me a call if they have any problems. I can help them with it. So
Okay.
yeah, the important part is, getting into that mindset of planning now for what's going to happen next year.
Yeah. And, Art, I always, at the end of these episodes, I always give the call out to our guests and working with farm business advisors, because you guys are experts at that part of the business. And I mean, again, you deal with the people at the end here, not the end, let's say when it's tough, but getting ahead of the situation, like I just mentioned, is not a bad idea. And I know, well, let's look at a few situations. A lot of farmers have had drought, so there's some financial concerns there. A lot of farmers have loans coming up for renewals. A lot of farmers are feeling great. A lot of farmers are feeling strapped. So having somebody to sit down with and work through these numbers, be a second set of eyes, can be just very valuable, right?
Yes, it is. It is. I'll just quickly relate one situation. I was working with a young farm family earlier this year from East Central Alberta, which is kind of a semi-arid area, and it's a pure bred cattle operation. And he was looking to expand, and their present location is really not suitable to that. And they were looking at buying another farm west of Edmonton, which was much larger and would allow it for expansion in their operation. The purchase price of the other farm was going to be 2.6 million. And we did a business plan and presented it to several lenders, and none of them would finance it. So the important part in that is the people, first of all, made up their own mind. Yes, this is what wanted to do, but then the lenders weren't on side. The other thing that sometimes happens is people make these rash decisions to buy a piece of land, like the quarter across the road when it comes up for sale.
Yep.
and want to jump into that, but that may or may not be a good idea depending on your overall financial situation. And what's your ultimate goal with your farming operation? Do you really want to grow it? Yeah. Like I had this one client several years ago, and I can't remember his name. Let's call him Joe. And he had a fair amount of land, and he was already also renting a considerable amount of land, and he kept buying another quarter. And I said to him, Joe, how much land is enough? He was in his late 50s at that time. He's in his 60s now. And his finances were in pretty good shape. But he said, Art, I view it this way. I have my operation set up for a certain amount of acres. Let's say 5,000 acres. I don't know if that's right or not, but it's an example. And if I lose, say, 1 or 2 quarters a year because the landlord wants to rent to somebody else, that's not serious. But if I lose a section or two, that's going to impact my overall operation. So my philosophy is to buy land when it becomes available, if it's feasible for me to do so. So perfect thought process, and everything was fine. And again, as long as he had the financial capability to buy that land, pay for it under various circumstances, and I don't think he would have anticipated 7% interest rates for the renewals. So
No.
yeah, that's a thing to watch out for.
And you'll know better than I will, Art, because I wasn't born in the 80s. I was, but
late 80s.
Yeah, there we go. And I think maybe that's an age thing too, and you have to go through it, and then you get that scar, just like anything, right? As a business owner, farmer, we've had our knocks and our learning. We've bought land and we've done loans, and sometimes when all is low interest rates in the beginning of your farming career, that's all you think you're going to get, right? And it's not that we lack the foresight. You can plan and go, okay, is there room? But to be honest, if you haven't experienced it, you haven't experienced it.
Well, that's a good point. And when I work with farmers, I have this CEBA program, and we can plug different interest rates into the loans. And so we can plug a different interest rate in and see how that affects the payment, and the number of the new payment with the increased interest rate pops up immediately. We can work that into the cash flow, and then we can see if that's still feasible. So my point here in bringing all this up is that it's called sensitivity analysis for the banks and the lenders. They generally want to see an analysis with normal income and expenses, but what happens if income drops 10 or 20%? What happens if costs go up 10%? And with using a tool like the CEBA, we can play all those what-if scenarios.
I like it. Okay, we covered a lot of ground there.
Yeah.
Loans, repayment, forgiveness, interest rates, upcoming renewals. I think we covered it all. Is there anything else you want to add, and or some final parting words for farmers as they're planning forward?
Well, plan for 2024 and start doing it now.
Yeah.
That's it.
That's it. Okay. I was waiting for a few minutes, like a little
short and to the point.
Yeah, you know what? Short and sweet is great and impactful. Okay, Art, I'll give you the chance to do a call out. If there's any farmers, Alberta, I mean, you work everywhere now because of this. If there are any farmers that need a little bit of help, can they give you a call or contact you?
Yeah. I've worked with people in Saskatchewan. I haven't worked with people in Manitoba yet. That's my next area to conquer.
There you go.
But, it's easy enough to do now. I do most of my work with farmers over Zoom, so nobody has to travel long distances and anything like that. And when I'm working with Zoom, I can put the spreadsheet right there on the screen, and as we're working through it, the farmer can follow me just as when he's sitting in my office. So it's the same thing. And it makes so much more sense than people having to drive for hours, and we meet for an hour or two, and then they drive home for another 2 hours, and the day is shot for about 1 or 2 hours of work.
Yeah, and I was just gonna say they can sit at home in their PJ pants. You wouldn't even know, and you don't even know what's in their cup of coffee either.
No, no. But having said that,
Yes.
if possible, I like to make one visit to the farm to actually see the place for myself. Because if they list a whole bunch of assets, I want to know that are those assets really there?
Oh, gotcha. Yeah.
And of course, a lender would do the same thing. He'll actually come out to your farm to have a look at it to see you own all this stuff. Okay, let's see it. See if it's actually there. And of
Yeah.
course, the land is easy. They'll just call up the land titles, and you can do that online.
I joke because it's a different world we live in. Okay, Art. Well, that was wonderful. I appreciate this conversation. I appreciate you always trying to help farmers and coming on our show. So thank you very much.
Well, thanks for having me, and we'll do it again sometime when I got another nugget for you.
I love it. Always my pleasure, Art. Thank you. And you in the audience, if you enjoyed this episode as much as I did, like it, share it, get it out there. And if you want to chat with Art, his information will be on the show page as well. His contact details, how to connect with him. So thank you so much for tuning in, and we'll see you next week. Bye, guys.
Bye for now.